Traders, what I'll do in this video is continue with some additional trade analysis. What we'll do, we'll go through some technology stocks. We'll begin with eBay, we'll transition down the list, and we'll finish with Zinger. So this is current through to the open, which will be Monday the 2nd of June 2014. Let's begin with eBay. As you can see, we've had a bidirectional trade set up on eBay as of last week. We've had a bullish trade trigger at $52.85 once we break above these old swing highs and bounce off the support level. We also have the bearish breakdown at $49.12, which will be, if I just zoom out on the detail, it'll be really the breakdown of this wider channel, which has been in effect since 2013. Having a look, pardon me, going back to December 2012. So a very nice trade set up on eBay. Which direction do I think this is going to go? I do think we are going to find a bounce at this position right here, and I do think we will start taking out these targets. One at 55, a second target at 57, and a third target as high as $60 a share. This will be the continuation of this funky little channel which we have going in eBay. This is a really good macro position to be purchasing shares, or at least buying into the relevant call options depending on your risk tolerance for eBay. So please keep an eye on that. That's a really good share to get us into this technology. A little bit of a market update. Moving to Facebook now. Facebook came very close to triggering above $65.14. We spoke about the potential of this being a little bit of a symmetrical triangle. Is it? Is it not? Don't really have a clear answer. It isn't really a textbook symmetrical triangle. We generally like to see these things form over 1 to 3 months. As you can see, this is really for the better part of 3 weeks, so it's much smaller. However, as I just alluded to, we are getting close to this bullish trigger at $65.14. The trigger itself is a little bit loose. We don't have the structure, all right, to work with at the moment, so it's not a favorite stock to be looking at buying if in fact the market and technology decides to continue bullish. There are better individual trades out there, such as GILD. Now GILD has been hitting into this resistance level since January 2014, really since or reminiscent anyway of the market overall. You can see that if we break above my trigger here at $85.31, then we'll be purchasing call options in Gilead Sciences. If in fact we roll over and the market turns bearish, we're looking at entries below $79.08 a share, trading down to target 1, target 2, target 3, $64, $70, and $76 on the bearish side with ticker symbol GILD. Let me move into IRM. Now IRM, we've had 2 triggers set since or during the month of May, one at $29 and another at $30. You can see both have triggered and both are successful. Thank you very much. Come again. As you can see, we're trading up to our next 2 targets. One here at $31.50, a second up here at $32.50. I do think we are beginning to trend. We are breaking above all of these old swing highs which have been established throughout the year 2013, and the volume is coming into IRM, which is really good to see. So please keep an eye on IRM for the future. Let's move into MA. MA did close above our trigger at 76.25. We are marginally profitable. It's only 20 cents, but this could be what we call a little bit of a bull flag. We've got targets up here at $78.50. We then have a retrade entry at $79.94, just shy of $80. That's a much better entry up here. But if you are not in MA at the moment, there is still positive signs. This could well and truly be what we call the bull flag, as I just alluded to. Very nice trade opportunity on MA. MU triggered for us this week also. $27.85 was the original entry. We are pennies away or cents away from hitting our first target at $29.19. If we break above this target, look for a re-entry, and this will be a really nice trending opportunity. So if you are familiar with the moving average trending strategy, which I teach in our free giveaway or our scholarship initiative in our A1 program, you'll know where to place your stop. If you are not familiar with that strategy, sign up today for our free giveaway in the way of a scholarship, 8 classes, 12 hours of trading content, which of course will be open to you if you create a new account here at Pivot Point Trading. Tesla Motors, again, very neutral at the moment. This is the perfect location for Tesla to roll over. It's also the perfect opportunity to break above 222.30. Very neutral on Tesla. No overwhelming analysis to tell us if it's going to break bullish or bearish. Just remain absolutely neutral on this one. Twitter looks to be putting in a base. All right, looks to be putting in a base down here, what we call a double bottom. If we get a close above roughly 36.92. Then we'll have a quick move up to about 46, which is an incredible move from where Twitter was. If in fact the buyers can't hold the current price, look to short below $29.02. Then again, we could have another repeat crash of what we saw a couple of weeks ago on Twitter, where some of our students made upwards of 300% in 2 days. All right, students making 15, 16, 17,000 in the space of 48 hours on a Twitter trade, which I gave them. So keep an eye on Twitter. YHOO, again, we had a little bit of a whipsaw. This was a losing trade for us. That's okay. They happen. Move on. We also have a bullish side to this trade at $35.07. Yes, we were triggered this week, and this looks like a perfect stair-step continuation pattern. If we move above the highs established last week, we're trading to $36, which is the open window of this bearish gap, then up to 37, then 38 on the bullish side for YHOO. We'll finish this recording with Zinger. Now, Zinger, we traded in at 375 to sell short, hit our first target at 334, reset the trade up at 321 on the bearish side. It did not trigger. We're starting to create a little bit of a base here. So if we start closing above these highs at $3.60, look for these old resistance levels as new targets. One at $4.60, two all the way as high up as $5.80. Do I think we're going to move back up to these old highs? No, I personally do not on Zinger. I do think we are just going to sort of plateau and essentially move into a little bit of a sideways low volatility period on Zinger until we get that definitive breakdown or breakout. I do think we have a little bit of resting and consolidation, or at least a little bit of a channel, before we get the next movement in the macro, or at least intermediate picture with Zinger. So that will really conclude us. This has gone for a little over 6 minutes. If you like this analysis, have a look at what we do at Pivot Point Trading. Send me an email at success@pivotpoint-trading.com. We can schedule a call, discuss your trading goals and how I can assist you reaching those. So thank you so much for watching this analysis video. All the best. Have a fantastic weekend. I'll see you next week, or during the week anyway, June 5 most likely, for some additional market and stock updates. All the best, everyone. Have a great weekend. Goodbye.